Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trading TV. This is your stage to shine.
Hello, good morning. How are you, everyone? Hope all is well. Hope you had a great weekend. Hello, Mario. Hello, Meza. Hello, everyone. So, 1 second, let me share my chart first. I'm still waiting for the calendar. Okay. So let's see what's happening in the markets. Good morning, Shishir. Good morning, everyone. I'm good, Meza. Tell me, guys, how was your weekend? How was your trading week last week? I'm going to share this. We have a big one today. So let's just take a quick look on everything. The DXY is still above 100. The Euro USD is still below 115.50, which is an important point. Or it 1.1570 actually, not 50. All right, let's take a look. Bitcoin is back at $67,000. Gold is gaining momentum, actually. So we're very close at Friday's high, which was 4,555. We are very close. We're like $10 away from that. Let's see if we're going to break below or not. All right. Check here. How does that look? Nope, all good. Silver is back above 70. So, okay. My trading week was casual and I was frustrated on my instrument, which I trade and made fundamental analysis. Don't you trade Bitcoin, right, Meza? Okay, I'm not sure what kind of analysis, but did good work. Well, I'd like to see that analysis. Hello, Pearson Hardman. You are looking overworked. No, I'm great. All good, all good. Okay, let me check this. Let me find the calendar, guys, so that we start with the calendar as always, and then we move to the charts so that we align both news, fundamentals, and technicals. Okay. So 1 second, please. We go here. All right. So did you guys see how many speeches Trump had last week? Like, he went out to give speeches maybe, I don't know, like 5 times last week. So I don't know if he's going to I will send you on Instagram, okay? Okay, so this is the week between March and April 3rd. So we're starting a new month, which means that we need to pay attention to what's it called, the monthly closings and monthly candles. So we start when we move to the charts, we're going to start with the monthly charts to make sure that we are aware of how each monthly candle is closing. Okay, guys? So that's super important. Okay, we go here. This is 1, this is 2, this is 3. Just give me a second, please. All right. So I'm going to share the, what's it called? Calendar. This is a big week, by the way. This is going to be a big week in terms of data points. We have a busy calendar. So 1 second. Then we do share again. Here, and we do this. Yep, there it is. Mesa is saying, I just work on their impact and like to get the real stance out of fake stuff, for which I wait little, and that's why I avoid direct news. Okay. Pearson is saying, again, this uptrend because of Trump, right? Like, yeah, like this guy is changing what he says like every 5 minutes. So markets are a bit shaky. But I think this is because of like, remember when they were talking about a ceasefire? Now, like, they're like, the hope has faded that there's going to be a ceasefire. So maybe that's why, like, you see the major indices, the stock indices going down, while gold and silver are going up. So, but I think this is just temporary. So let's walk through the weekly high impact news calendar, and then we cross check with the markets. So we cross check or align our technical analysis with our fundamental analysis. Okay, so let's start. So here we go. We start with Monday. Today we have, or we had, a speech for Trump. This is by mistake, of course. So we have two speeches today. One for President Trump. It was this morning, which he reiterated about the ceasefire and so on. And then he talked about Iran and how he's doing well, and how the US is doing well in Iran and they're winning the war. Nothing new with the rhetoric, but that's pretty much it. Then we have the Fed Chair Powell speech today. It will be around. It will be at 6:30 Dubai time. So this will be very important. It will be right after the New York Open. So this will be very impactful to the markets, and we might see high volatility here. I believe, yeah, as Suham said, as Pearson Harman said, the jump we saw this morning, or like since the market opened today, was mainly because of Trump and his speeches. So let's see how many more speeches he has this week, because last week he had many speeches. Okay, so now we move to Tuesday, which is tomorrow, and the last day of the month. So let's see what we have here. We have the GDP coming from the UK. So we have the quarterly number and we have the yearly number. So the quarterly number is expected to be to match the previous reading at 0.1%. So very small growth, very slight growth, but still growth. If this comes in the negative, that means that the UK's economy is contracting, and they will need to cut rates to boost the economy before they enter into a recession. Okay. So as for the yearly number, the previous was 1%. The forecast is 1%. So anything less than 1% is considered to be negative for the GBP. Anything above 1% is going to be considered positive for the GBP or the British pound. Okay, so this is for the GDP numbers coming from the UK. We're done with those. Then next we have the CPI coming from the Eurozone. Look, now this is going to be very interesting. Now, the CPI previous reading was 1.9. Okay, let me just make sure that this is right. Yeah, so this is like a hands-on experience or a hands-on example of how wars and energy can affect or how fast they can affect inflation. So the previous reading for the CPI in the eurozone was 1.9%. Now you know what happened like during the last month, and this reading is going to be about March, right? So you know what happened since the very beginning of March. We had the U.S. Iran war, and we had higher energy prices. We had um, major supply chain disruptions. So everything was like aligning to cause inflation to go up. So what happened here is, look how much the markets are expecting to see the CPI or the inflation in the eurozone after it was 1.9, which is even lower than their target of 2%. Now look at how much is expected for the euro CPI to be 2.5%. So it's like they undid one whole year of their progress, which is very bad. So that's why we saw, not last week, was it last week or the week before? The week that we had like five, six, seven central bank interest rate decisions or central bank meetings. Was it last week or the week before? I'm not sure. It was not the week. No, not last week. The week before, because the Fed was on March 18th. So anyway, uh, did you see now why all of them decided not to change interest rates, not to cut rates? It's because they know that the wars and the energy spike or energy price spike would cause this to happen, which is higher inflation. So we already started to see inflation ticking up, or at least expectations of higher inflation. So if this comes in higher, then like if this comes as at 2%, or like anything above 2% is going to be positive for the euro, because it means they're going to keep rates higher for longer to fight this inflation. But if it comes in at, like, for example, 2%, 2.1%, that would be much less than the forecast, and euro might actually drop further after this. Okay, so let's see, wait and see. Next, we have the Chicago PMI. This is not percent, by the way. This is a mistake. It's 57.7, and the forecast is 54.7. So we have a 3-point decrease expected. So let's wait and see. If this comes in lower than this, then this is going to be a negative for the uh, the regional manufacturing sector, which would be eventually negative for the US dollar. If it comes in higher, then it's positive, but anything above 50, as I told you before, the PMI numbers, anything above 50 is considered to be expansionary. So we're okay. Then next, we had the consumer confidence. We have the consumer confidence on Tuesday. The previous was 91.2. The forecast is 88, which is very normal and very expected, because the economy, or the US, is in war with Iran, and like the economy is not at its best. So it makes sense that the consumer confidence is not at its best and is expected to go lower. So that is fine, but that's negative for the US dollar. We'll have to wait and see how this turns out to be. And finally, we have the job openings on Tuesday. No change is expected, so 6.9, and the forecast is also 6.9 new jobs. Okay, so that's it for Tuesday. We move to Wednesday. So see how, like, um, how busy this week is. Like every day, we have minimum 5, 6 data points. Okay, I will send you. uh Yeah, the week before, right, Mesa? All right. Okay. So on April 1st, which is Wednesday, we have the ADP non-farm employment change, which is expected to be lower than the previous reading. Previous reading was at 63,000. The forecast is 42,000. So if the actual comes in anything um, higher than this number, which is 42, that would be positive for the jobs market. Anything less is going to be considered as negative for the jobs market, which would be also negative for the US dollar. Anyway, so this number is always like looked at as a preview of the NFP that is going to be on Friday. So on Wednesday, on the first Wednesday before the NFP, we always have the non-farm employment change. Then we have, and like traders look at this number to see like, and they look at it as a preview of how they're expecting to see the NFP. So if this number comes in positive, the NFP is expected to be positive. It's not a hard rule, but most likely that's the case. Okay. So next we have the retail sales and core retail sales. They're both expected. Okay, so the retail sales is expected to be higher, to go up from minus 0.2% to plus 0.4%. And the core retail sales is expected to be to go up from 0% to 0.3%. So retail sales is expected to go up, which is positive for the US dollar. The S&P Global Manufacturing PMI is expected to be the same as the previous reading, 52.4. So anything above this is going to be considered positive. Anything below this is considered to be is going to be considered as negative. Then we have the ISM Manufacturing PMI, the ISM Manufacturing Prices. So look at prices, like the first thing I looked at was the forecast. The forecast has to be more than the previous. Why? Because prices go up in times of war and times of high energy prices. So as you can see, the forecast is a jump in prices, although the manufacturing PMI is expected to be lower than the previous. So the manufacturing activity is shrinking while the prices are going up of the same activity. So it means that inflation is ticking up or creeping up slowly. Okay. Finally, we have the crude oil inventories. Last week, we had a big build of almost 7 million barrels of oil. Maybe they're like just storing oil just to have like a higher inventory in case of a supply shock. But for now, like each week, we're seeing softer demand on oil despite the supply shock. So yeah, we'll see how this week turns out to be. On Thursday, we only have one data point, which is initial jobless claims. The previous is 210,000. The forecast is 212,000. So very close to the previous, slightly higher. If this comes in high, like I've been watching the trend of the jobless claims for the past, I don't know, couple of months. They're like, they're doing well in terms of jobless claims. The U.S. economy is doing well, or the jobs market is doing well, uh, based on the readings of or the trend of the jobless claims, because it's going down for the second, I think, or third um, consecutive week, which shows resilience, or at least higher demand in the jobs market. So yeah, I think like anything between 200,000 and 220,000 is still within the healthy range. Uh, in my opinion, about protest, the pattern I usually saw across history is the people who have power, they elect and remove people depends on their interest. I didn't get that. Let me read the full conversation. I saw some big protests going on in America to get Trump. Yes, correct. Uh, do things like this actually work there? Um, I don't know, but like it might happen, it might work, but I hope it does work. But for me, I believe that the best chance they have is the midterm elections that's going to happen in November. So in November, like the Democrats are going to hammer the Republicans, which is Trump's party. So now the majority of the votes are with the Republicans. So if the midterm elections is won by the Democrats, then much of the craziness that we're seeing now is going to stop because uh, Trump wouldn't have anyone to back him up with his ideas and I don't know, adventures. Okay, so I think that's the best chance. But about protests in the US, I'm not sure it's going to work, but I hope it does. I genuinely hope it does. I want America to join the. Okay, every trader wants it to work. I might go to America to join the protest. Yeah, I feel you. All right, so that's for Thursday. Finally, we have Friday. So we have the Good Friday. So happy Easter, everyone. We first have the Good Friday, then we have the Palm Sunday. So happy Palm Sunday in advance, and then happy Easter next week. But for the we have an all-day holiday in the US and the UK, so that's for Good Friday. But from the US, we have some important data points, which are the average hourly earnings, which is expected to be slightly lower, the non-farm payrolls, which is expected to be higher than the previous reading. The last reading was minus 92,000 jobs. The forecast is plus 56,000, so that's a big change. The unemployment rate is expected to stay unchanged at 4.4%, while the S&P Global Services PMI is expected to stay unchanged at 51.1 as well. So yeah, that's it for the economic calendar. Let me see if we have any questions before we move to the charts. You guys, do you have any questions regarding any data point that we've walked through? Do we have, yeah, go to yes, I want to work. Okay. All right. All right, so I think it's time for us to move to the charts. What do you say, guys? Yeah, so we stop sharing and we start a new share of the charts. To the charts, please, will do. Guys in the backstage, I'm trying to share my charts. Can you please help? There it is. Thank you. So as we agreed, we're going to start with the monthly chart. So that's the DXY monthly chart. As you can see, this monthly candle is very, very bullish. Okay. So if this closes like this, anything above 100 is going to be considered very, very bullish. And this would be like the biggest gain for the XY in over a year. So this was when was that? It was on July 1st, 2025. So yeah, this this was the biggest jump, but this would be the second biggest jump since July last year. Okay, but was it July? No, I don't remember. It was July. Oh yeah, was it? Yeah, correct. Okay, then we had this. Yeah, correct. So that's a very big bullish candle on the monthly. Then the weekly, we look at the weekly. So the weekly also closed bullish. The next level we have in sight is 102 on the DXY, which would send the Euro USD much lower than it is right now. We're going to move to the Euro USD chart like a little bit after. 1 second. Okay. Yeah, so it's still trending. Remember last week we were around this area, and we said we might see the 98.7 as a correction, and then we start moving upwards again. That's exactly what happened. We went down to a 98.85, and then we got rejected from this trend line, which also coincides with the 20-day moving average. And we got rejected to the upside, and we started closing higher and higher. And even on Friday, we had a very bullish close. And now we're expected to see higher prices on the DXY. And based on the weekly chart, we're going to see 102 on the XY. Okay, so now it's time to move to Euro with the monthly. It has to look exactly the opposite. So yeah, we got this rejection from this great area. If this monthly candle closes below this area, which is below 115, then Euro is set for a very big drop. Maybe like the first trip is going to be towards 1.12, then we're going to see 1.09, and then we're going to see 1.02, and then eventually we're going to see below 1 if this continues to go as it's going right now with the same momentum. Why? Because DXY is also expected to go all the way up here. So I'm expecting to see higher DXY than DXY was back in 2022 when they were hiking rates. Remember, there was a time that they were like hiking 75 basis points every meeting. So now, look what happened after that period of tightening. And this is when they said they're going to stop hiking rates. The DXY dropped. Now, what I'm saying now is I expect it to go even higher than when they used to be hiking 75 basis points. So I'm expecting to see the XY at around 120, while the Euro USD is expected to do the exact opposite, and we might see it go to these levels, which is the 88, 0.88. But that's a very long-term analysis. It might take a couple of years before it happens, or not. I don't know. But direction is more important than time. So our job is not to time the markets. Our job is to know the direction of the market. Okay. So the weekly also closed somehow bearish. It was bearish, yeah. The daily, we hit a trend line. We got rejected from the trend line, and now we're moving towards the 114 area, which is less than or like 100 pips away from here, one big figure away from here, and even today broke below Friday's low, which was 1.1505, I think, or 1502, and we went as low as 1.1480 today during the Asia session. So yeah, it's still trending downwards. My trade, I have this trade from last week, still running. I'm targeting 1.1418. So let's see how that goes. That's it. Yeah, so the lowest point was when? Yeah, it was during the Asia session. Correct. All right, so we go back here. We go to GBP. Now, GBP is very interesting because when was the what's it called? The GDP number. It's tomorrow, right? Yeah, it's going to be tomorrow. Okay. Watch the live stream that was on Thursday. Saif shared the strategy. Okay. Yeah, Mesa answered you, silent trader. The during my live the live stream we had on Thursday, I shared my strategy. That is correct. Oh wow. What did I expect from the speech? Which one do you mean, Powell's or Trump's speech? Okay. By the way, I'm talking to Uni Software. All right. So back to the charts. The monthly is still very bearish for now. Okay. Weekly is still very bearish. It closed very bearish last week. So we're still heading to 1.3 flat. And on the daily, it's still also very bearish. On 4 hours, also very bearish. Like, guys, basically everything is bearish against the USD. So DXY is very bullish. And all currencies against the USD are facing a hard time. Okay, so that's pretty much it. Let me go to USD JPY because it went above 160 late last week. So yeah, if it closes anywhere above, one second. If it closes above 158 this month, which ends tomorrow, if it closes above 159, let's call it, not 58, between 58, 58.5, if it closes above that, I'm expecting to target the next level of 161 or 162. But as long as we're below this, I don't know. We are safe not because of technicals, but because of fundamentals. Because anytime the USD JPY exchange rate goes above 160, we see an intervention from the Japanese government and Japanese central bank to support their local currency so that it does not harm their global trade with other countries. Okay. Thank you, Meza. Okay, Powell. What I expect him to focus on the inflation fears and how he's going to show his concern of the inflation because like energy prices went up way too high, and uh, the war itself is like weighing on the U.S. economy. So I think I'm not sure. He's going to say like or show his concern about the inflation, the U.S. inflation, and he's going to mention something about the next meeting or the path or future path of interest rates and monetary policy in the Fed. I don't know if he's going to mention anything about his stay in the Fed, because he said if no one is confirmed by May to be like, if the his like successor is not confirmed by May, he's going to stay as Fed chair. So let's see how that goes. Maybe he's going to say, or he has anything to say about this or about his investigation. Many things he's going to like. Many things are possible for him to say, but I think he's going to focus on inflation. Uh, okay. So the sharp fall, it will go slow and steady. Yes, Pearson, that's exactly what I said right now. So I was just saying that minutes ago before I answered Paul's question, or the question about Paul. So yeah, every time it goes above 60 or above 61, we see the government interfere and bring down the USD Japanese. So they buy Japanese yen so that the USD JPY goes down. So let's see how that goes. I think they're not going to just leave it fly, because anything above 160 is harmful for the global trade. No, not the Japanese trade balance uh, with the world. So yeah, let's wait and see. Um, but for now, it looks bullish. For now, even the weekly close was bullish. Okay, let's see how like the best chance we have, Suham, is if we close below this level. Do you see this level? Which is 158, as I said in the beginning. So if we close below 158, we're like super fine. Let me check if we achieved the target based on Fibonacci. Yes, we're almost there. We might like have achieved the target already, and we might start going down from here, or we might go back to 161 before dropping. So let's wait and see. Let's take a look at oil. Who asked about oil? And share your idea about US oil. Yes, I will. This is US oil. We go to the monthly. So, for those of you who watched Thursday's live stream, when we explained the engulfing strategy, this is basically it. We saw a very big engulfing candle, bullish engulfing on the monthly. Then we saw a 50% retracement. So right after the war started here, and we saw a big jump. So that's a classic example of a reversal setup. Um, we've been dropping for the past 4 years since the Russia-Ukraine war. So now, finally, we saw this very bullish engulfing. We had the same setup, Mesa and Pearson, and then we started going upwards. So the monthly is very, very bullish, obviously. Let's move now to the weekly. Sorry, this is 2 days. We go to the weekly. Okay, so if you see here, like the weekly candles are printing red, although like they keep closing above this level, which is the 92. This level is very important. If we see any close below 92, then and only then we might be looking at a correction. But for now, during the week, we have huge swings. We have like, let me show you how much. So last week we had swings of 20% in price, and 2 weeks back we had swings of almost 50%. Okay, so like prices are swinging like crazy in oil. I wouldn't be interested to enter the an oil trade because my closest stop loss is like 1,000 pips away, and I like, honestly, that's too much. um I'm not sure I'm going to like get a good trade or a good deal on oil, but I might. So I'm not saying like I'm closing the door in the face of oil, but for me, for now, I can see a feasible opportunity, if that makes sense. Okay, so yeah, we agreed that the pivot point is $92 per barrel. So if you see oil anywhere around 92, and you see your trading setup or like a long setup there, go ahead and buy if you have a close by stop loss. Okay, all right. I think now it's time to move to gold, right? But before gold, no, let's go to Nasdaq. Let's see what's happening here. Go to the monthly. Oh my God, monthly is very, very bearish. Oh wow. And the weekly. Weekly is also very bearish, and we have nothing to stop us before 21,000 points. So we have 2,000 points to the downside, almost guaranteed. Almost. Well, nothing's guaranteed, of course, but just telling you. Then we have the daily. Daily is very bearish, and look what it did. It just closed below a very important trend line. So I think even like even more than 2,000 points. It's going to be going to be ugly. You're going to see it bleed. So yeah, this was a range that we've been trading in for I don't know how much, how long, but well, let's see how long. Since October, now we finally broke below on the US 100. It closed like it lost 4% only like last week alone. Okay. I have a little request. So can you say you that? Okay, all right. That's between Mesa and Suham. So I'll go back to what I'm saying. We go to S&P 500. S&P 500 is also very, very bearish. I think we're going to see this level, which is 5,500. We go to monthly. Yep, monthly is very like, guys, you have no idea how important the monthly closes are tomorrow. So I think either like everything will stay the same till tomorrow, or like something, I don't know, crazy will happen today, and everything will like will reverse and close in another way. But if tomorrow everything closes as it is right now, we're going to see a continuation in the analysis that we we've been talking about for the past month. Okay. All right. So the monthly is very bearish. The weekly is also very bearish. The daily is also very bearish. Yeah, so no point in looking any further. That's very bearish. Okay, so the Dow lost 10% from the top, so it reached $50,000, 50,000 points. Now it's at 45,000 points. So that's already a very big drop, a 5,000 point drop. Okay, now we go to the weekly. Weekly also, they're all basically the same. Okay, so we take a look at Bitcoin first. Yeah, so we might see this happen, which is a drop here, then a continuation to the upside. Let me check the weekly. Yeah, so the weekly close was somehow bearish, so we might see this happen, which is a drop to 57, 58, and then a continuation to 144. Okay, finally, let's go to gold and see how it's going. See how our analysis from the past weeks is going. Reset chart view. Okay, so what we have here is, yeah. So remember your question, was it your question, Mazo, or was it Rajdeep's question? I forgot. I think it was Rajdeep's question. He asked me like, do you consider this as an engulfing candle? I said yes. Although it didn't close below the previous low. So if this closes like this, it's still an engulfing candle and still very bearish. But if it closes below this, it becomes very bearish. So I'm not sure if I wanted to close below 4,400, because maybe this will push it down even further than I wanted to go, which is maybe below 3,500 if it closes like this. So maybe I wanted to close only around 4,500 for my analysis to go through. But I don't know. So if this closes like this, guys, that's very bearish for gold. But anything can happen in a single day and a single night. So we'll have to wait for 1 day and 14 hours to make sure that it closes as we want it to close, so that we continue dropping towards the levels that we are planning to buy from. Okay. I don't know what I have as a question. Okay. How is the monthly close important? Like, how do you analyze it? Okay, so like, let me give you this example, Soham. So, for example, if tomorrow this closes as a green with a very big wick, is this an engulfing candle, or is this a positive close, or is this a negative close? It would be a very positive close, right? Because it means it hit here and it got rejected to the upside and closed above 5,200, for example. That would be very positive and very bullish for gold. But if it closes like this, then it changes the whole story. It means for this month, or like, if you consider this candle as a battlefield, a monthly battlefield, it means that in this battlefield or this monthly candle, the bears won. So you know what's going to happen next. Like, it's very rarely then when like you see an engulfing and then you see a reversal to the engulfing. It gives you like a while of short-term trends that you can catch on hourly charts, 4-hour charts, sometimes lower time frames. But what I mean is that the big time, like the big picture, is an uptrend, right? So, but look at this. This is, I think, this is the biggest candle that we've seen in a very big period of time. Look, this is the biggest one in a long time. I don't think we saw anything like this before. So this is going to be very important. We have to pay attention to this. And but for me, it makes sense. It's healthy because like we went up like crazy. In January alone, we went up like, I don't know, $1,000, even more than $1,000. So yeah, it makes sense that we correct after this very parabolic, very big and parabolic move. So yeah, let's see how this closes. The weekly closed somehow like with a rejection, but still bearish because it's below 1, 2, 3 moving averages and below this the lower band. So that's negative for the gold. It all depends how it closes tomorrow. Tomorrow is very important, guys. The daily actually closed positive, somehow positive, but still below the 126-day moving average, which is negative. But let's see. I think the worst that can happen to the downtrend is it might reach, I don't know, close to 4,600, which is around 4,570, 580, and then we start going back down again. But for now, it's still negative. On the short term, of course. Long term, it's positive. It's very positive. This is the biggest, and why you say you can go below 3,500 after closing the current price. Yes. If I have 10 questions, I would analyze which one is the most important, making sense during working or reading. 1 second. I got you. But like, don't do like a very hard job in filtering questions. Sometimes like asking what's on your mind might help a lot and even help others. So you don't need to filter out any questions. And yes, Pearson, this is why I say it might go down to 3,500. But let's see how it closes. Like, I've been long enough in the markets to know that everything can change in one night. So let's wait and see. This was a long one today. This was like a heavy one, a rich one. So I hope like it was beneficial to you. You learned something new. You got a good recap of last week and a good preparation for next week or for this week that we're in. So if you have any questions, I'll be more than happy to answer. Yeah, feel free, please, Meza. So thank you for joining. Thank you for tuning in. If you have any questions, you know where to find me. And I'll see you on the next one. Good luck trading this week, guys. Take care of yourselves. Bye-bye.